China's unbelievably massive hidden debt is something that can't be papered over. This can't be swept under the rug. The problem is only getting worse, and of course, there's nothing stopping this as more speculation is encouraged by China as well as every other country in the world. More profit, more money, more everything. But the cycles have become more aggressive, more exaggerated. This won't end well. You came here for the truth, so let me unveil that for you. Today we are going to look at the trouble in China. I had talked about this issue previously, whether it was last year or the year before. China has a $32 trillion secret. I'm talking about a serious problem no matter how big the economy is, and we're going to get into it today. This is a report directly from the People's Bank of China. This information is not being hidden to those who are paying attention, but of course, the mainstream is not aware of it. This information is for those who seek the truth. Along in this PDF, you're going to see this piece of information buried on page 48. The off-balance sheet business continued expansion while the embedded risks remained. At the end of 2016, the outstanding balance of the off-balance sheet of banking institutions, including entrusted loans and entrusted investments, registered 253 trillion yuan. The outstanding balance accounted for 109% of the total balance sheet assets, up by 12 percentage points from the previous year. And at the very bottom, they mention this: weakness remained in the management of off-balance sheet business, and contagion between on and off-balance sheet activities might exaggerate. Now that was back at the end of 2016. The data is from this report is from the following year. And we have seen things getting worse. I'm going to talk about this. Even Bloomberg started to touch on some of the issues. They didn't mention this, which, by the way, if you convert 253 trillion in their currency into US dollars, I just did it today, and it's approximately 37 trillion. But because I'm referencing it at that time when I did the video, it was 32 trillion. So I've gone with those numbers, but actually it's technically worse, but that's because of the exchange rates and so on. Let's look further into this. This is a chart for those visual learners out there, just showing you the bank's off-balance sheet business according to the PBOC's own stats. I just showed you them. They're pulling the data from that same report just to give you an idea of what it looks like. You can see the blue bar graph there giving you that data as well. China seeks to diffuse its $4.5 trillion local hidden debt. China's multi-year campaign to contain the financial risk is refocusing on the so-called hidden debt owed by local governments, as officials seek to reduce repayment pressures amid falling tax revenues. This is going to be a big issue for them. It's a big number, obviously, but it's hidden, and that's the issue. It's not being brought up here into the mainstream. The public really isn't aware of the risks associated with it, and the financial companies and all those interconnected are going to be sideswiped by this as there are more delinquencies, more defaults, more pressure, and so on. Provinces and cities from the east to the west are looking for means to pay off or restructure their implicit borrowings, a term which includes off-book funding via financing vehicles. They want to go through the China Development Bank, which, by the way, is supporting the real estate there as well. In my other videos on that, I've talked about this. And others are selling off state-owned assets, including office building and houses. I have some more information below that I want to show you on that. But this is a problem when you know they have to start selling off the assets within that particular country. They can't pay the bills. At the bottom, they're basically talking about the fact that as they're cutting taxes by $300 billion equivalent, this is going to create a shortfall for these local governments, and then we are going to have more problems as they mount. The fact that there is no official estimate of the size of the implicit debt, which usually carries higher rates than on-book ones, makes the issue even trickier. And this is going to be a very big problem that stems from China, but look around the world. We've got the same problems essentially everywhere. The motive is just that the problem can't be delayed anymore, as in many places, fiscal revenues and gross domestic product aren't enough to cover the interest and principals. And that's when you know you're bankrupt, ladies and gentlemen. Such probes are underway, and so far they've shown that hidden debt in some places exceeds the on-book borrowing. You have to know when it's time to call it quits. When there's not even a realistic level of debt or assets, your liabilities are all messed up, and everything is kept off the balance sheet, off the books, like the unfunded liabilities in the United States, eventually this collapses. Nobody knows when, nobody knows why exactly, but this is really going to be the cornerstone of that, the linchpin. Payments due for local government financing vehicle debt, just part of the off-book borrowing, could reach 2.3 trillion this year, according to some estimates. At the very bottom paragraph, they're talking about those asset sales. For example, a district in the northeastern city is planning to sell more than 38,000 square meters of offices and government-built housing to repay the maturing debt. Now that's, as I said, a clear and obvious sign that they are panicking right now. November woes. China's bond delinquencies spiked to the highest level back in 2018. You could see the value of Chinese local corporate bond defaults continues to increase. Now you might see these numbers here. It's in their currency, by the way, about 20 billion worth, and that's a small number compared to some of the others that we've seen, but it doesn't matter because we're looking at this as being a continuously increasing trend. And as time goes on, this is only getting worse as we see all these problems piling up on top of each other. It's not just the debt, but it's the sheer amount of different issues that have piled up. China's total debt to GDP, look at it on any level. Financial sector, government, household, non-fin corporates, everything is getting worse as time goes on. This cannot be sustained for any period of time. China's local governments may have accumulated $5 trillion worth of off-balance sheet debt, or even more, suggesting further defaults are in store, and that is according to the S&P. The potential amount of debt is an iceberg with titanic credit risks. Much of the buildup relates to local government financing vehicles, which don't necessarily mean local governments themselves are on the hook for paying off the obligations. How in the world is China ever going to paper over something like this? It's just impossible. And that means if you have these type of assets, whether it's real estate, whether it's financial, you're worried about the corporations that are involved, all of this is intertwined, and of course it will unravel. At the bottom, they say something very interesting. The markets are right, in our view, to feel more concerned about the sustainability of China's debt and the increased financial risks. We shouldn't necessarily be pointing fingers specifically at China because all countries do this. You have to understand the way that they manipulate things, and that's what I try to do on the channel, is try to just consistently bring out that data to show you every country does basically the same thing. They keep the public in the dark, they keep the media on their side, and this has been a way that they have over the years consistently maintained the level of control that they desire. We have seen massive speculation taking place within real estate. This happens to be Hong Kong, but of course that goes with other places like China, like in all of Asia. We've seen it in Europe, we've seen it in North America, everywhere in the world. There has been this need, this desire to get the money out of cash and put it into an asset because of course the money is being devalued. It doesn't matter where you go. And that has really escalated in recent years, and we've seen the prices get extremely hot in areas of Asia in particular, where you can see Singapore, Hong Kong, China has just massive levels that people can't pay. And this is what's happening. People are living in these steel boxes in the world's priciest property market. Now, to me, that looks like one of these containers, shipping containers, that's been converted into a home, and that has shown you the level that people have to go to in order to live. Now, I'm not saying this is bad. I know a lot of people that do this that love it, okay? At least they say they do the tiny home living. They live in RVs, they live in their vehicles, whatever it is. I don't have anything against that at all. But if it's a person who wants to be living in the city or maybe wants to have some land, they can't afford it and they have to go to this route because of what happens with central banks and all their creation of these debt-based products, then I have a problem with that. Well, I'm going to end the video there. If you found it informative, please give me a thumbs up, and give me a thumbs up. You are supporting this channel, so I do appreciate that very much. And last but not least, if you want the financial education you weren't taught in school, well then, these two books have everything that you need. You can get all the details in the links in the description. If you want the audiobook, you can get that at themoneygps.com. If you want to see that other video I made specifically about the $32 trillion worth of hidden secret debt that is being held by China, you got to watch this video. Click on it and I will see you there.